Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, July 20th, 2011. Now, this morning I'm talking about markets want deals done now. And basically what's going on is we're starting to get a little bit more clarity here what's going on with the Euro debt crisis as well as the U.S. debt ceiling talks here. Tomorrow, EU finance ministers are going to meet in Brussels, and they're going to attempt to hammer it out. And so far, Germany's been pretty reluctant and resistant to really come to the table and take some of these big steps. It's very politically. It's a time bomb going on in Germany there for Chancellor Merkel and her party, but it's the right thing to do. And what it comes down to is this: is that the market is pressing them to get a deal together. All right, we know about the problems in Greece. Okay, Greece is a total disaster. They're trying to take steps necessary to get their economy in order. All right, but now this is spreading to Italy. This is spreading to Spain. All right, bond yields have gone up in both of those countries, not significantly, but it's a start. And the problem is that you can yell about Portugal and Greece and Ireland all you want, but if they don't figure out what's going on with Italy and Spain, then you can do all the fixes you want in those three countries, and it's not going to make a bit of difference. So what they're talking about is maybe being able to access this emergency fund that they have, and what that to buy bonds. What that would effectively do, it's almost like quantitative easing for each country's bonds to try and help keep yields low. And what it'll do is it'll allow countries to buy those bonds back from the facility. So these are a bunch of plans being floated about, and we'll have to see how it works out. But it looks like people have had enough, and what's going on is taking place far too long, and people are saying, hey, let's just get it done. And that's the same thing going on here in the U.S. We have U.S. debt ceiling talks, and it looks like they're coming closer to a plan. They're talking about a couple of different plans. We'll see what happens. House Republicans are still holding out on this tax hike deal, but you know what? At the end of the day, public opinion is starting to turn against them, and the longer this goes on, it's for the worse. So you know what? It's going to be unfortunate in the long term. I think raising taxes is a bad idea right now, but you know what? Do it, and you just be ready to point the finger and say, hey, listen, all right, we'll get it done, but this is what the possible outcome is going to be. So, at the end of the day, we need certainty in markets, okay? We can't have this stuff hanging over our head. We can't have people being childish about it, and, that's the end of the story. So we're going to see what happens. It's going to be a big week here. By the end of the week, hopefully we have at least further talks, or at least the market thinks that we're moving closer to resolution. So you can see here markets are pretty happy about this. Euro's moving higher here. We're just looking at a quick 5-minute chart. All right, we're back up firmly above 142 here, about 142 and a quarter. Let's see what else. Let's look at the Aussie real quick, see how Aussie's doing. Aussie, same deal, pushing back up to highs around 107.50. You know what? I'm going to pull it out a little bit on the 2-hour chart so you can see we're approaching this 1, 2, 3 triple top area, and I think that if we get a back up above here, we're going to surpass it this time. They had a leading indicator index come out in Australia. It was actually a little bit lower, down 0.1% versus last month's gain of 0.1%. But the markets are slowing down. We're starting to see a global slowdown with a lot of these austerity measures kicking in. So we're going to have to see what happens there, but it looks like Aussie could continue to move higher. I just want to go back. Let's look at I don't know. Let's look at pound dollar. Let's talk about the pound real quick. All right, show you the pound on a 5-minute chart. Bank of England rate policy meeting minutes came out. Right, you can see markets sold off a little bit because they didn't change policy at all. They left everything changed, but there were some sentiments that perhaps they should stop with the quantitative easing and their bond buying there. They haven't done it, and they're prepared to let inflation go higher. Even people are saying perhaps even the 5% CPI in order to ride out the government austerity. So we're going to have to see what happens there. Now they also have later tonight, they've got their consumer confidence figures, which are going to be published, which are expected to be lower. So basically what's going on in the markets is a lot of these reports that come out, the expectation for what's happening has gotten so low because things just seem so bad that all these numbers are starting to come in a little bit better than expected. And that's what happened yesterday with the building permits and housing starts figures. Okay, they've been lowered so much that, boom, all of a sudden they came in and they did very well. So that was a good story. Now later this morning we're going to get existing home sales in the U.S. All right, last month we had a decline of 3.8%. This month we're expecting an increase of 1.9%. We'll see what happens there. But in Europe, German producer prices came in about as expected, a little bit higher. So they're not so much worried about inflation now as they are as getting this whole deal together as far as the debt ceiling goes. Just want to show you dollar CAD here. Dollar moving to new lows here. Let's see here. Let's look at this on the daily chart. All right, you can see we're reapproaching here the previous year lows here at about 90, looks like 94.40, 94.50, something like that, which is interesting as Looney's going higher, as oil's pushing back up. Oil back up to just about 99 bucks a barrel. All right, and we can also look at what's interesting is gold. Gold is actually selling off a little bit now. Okay, and it's pulled back from 1600 to about 1587. So that also shows that there's less of a demand for safe haven assets, which basically gold has become. Okay, but you can see it's still sitting up, well, the 1475 area. I guess I drew this Fibonacci retracement a while ago. But so that's what's happening really. So we're going to see Swiss francs probably selling off a little bit here. We'll look at euro. This is on the daily chart. Yeah, let's break it down a little bit. Yeah, Swiss francs selling off that that 114 area. So we picked that one off yesterday on the double bottom for you. And that's really about it. So right now it's all going to come down to these debt talks. I think we'll hear a little bit more talk about it. We're going to see these U.S. Home sales figures. If those come in better than expected, then the market could get a little bit giddy. But then at that point, we've seen that the market's sort of been reacting to quantitative easing lately, or at least the thought of it. So perhaps if the numbers start looking better, people are going to say, hey, wait a second, no QE3. Maybe it's time for equities to slow down. But I don't think that's going to be an issue. Right now, stock earnings are still coming in much better than expected. And that really is the only place in town for investors to be. So I think that the market would also react favorably if we didn't have QE3 because the actual economy was turning around. So that's what we're looking at today. I'm just going to say, let's get the politics out of it here, folks, and just get her done, people. And you know what? We'll deal with the consequences later, because that's always how it goes. If you raise taxes, oh well, people lose jobs, or people take money offshore, or whatever the case may be. So we'll see. And if you're somebody who makes a ton of money through a job where you get paid a salary like that, then you know what, you can pony up a little bit more. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.